Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for July 8th, 2025. Tonight, I asked the question, should a rising number of divergences on stocks signal a rising concern? It might, and I'm getting a little bit worried. Again, it's July 8th, 2025. Email marketmripro@gmail.com and Google Groups Top Down Trader. As always, these sessions are for educational purposes only. Anything I talk about, any recommendations I make are in the spirit of education, not investment advice. The intent of this video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools for multiple platforms, but I am an independent trader. I welcome you to join my Google group. It's called Top Down Trader. It's not for solicitation. I don't give my list to anyone else, but I do, as I'm doing this weekend, a educational event where I'm going to talk people through how I use Market MRI Pro, but I do a number of different programs, how I trade options, etc. And I make my invitations through Google Groups. It's free. It's called Top Down Trader. You just go to Google Groups, click all groups, look for Top Down Trader, and let me know how you want to be notified. And as a bonus for joining, you get $100 off any of my tools that you buy just for being a member. And that would be on top of any discount offered at that time. From an economic calendar, Wednesday we'll have wholesale inventories, but it would be interesting to hear in the afternoon what the FOMC May meeting concluded. There's been enough Fed speakers since then that we're going to probably hear mixed stories about cuts or no cuts. And I'm not sure it's going to be very moving. Got inventories, as I said, in the morning. Then Thursday we got jobless claims, more Fed speakers. And then Friday, the federal budget. On the earnings, it's a quiet week. We got a couple in the afternoon that matter Wednesday. And then Thursday morning, to me, really starts the next round of earnings with Delta kicking it off before the open on Thursday. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So, did we signal a top today? We may. We had what's called a red candle high. You look to the left, you count back 10 to 20 bars depending on which formula I'm using. In this case, it doesn't matter if I put 50 bars. Did we have a higher high today than we have in those 10 to 20 bars? Absolutely. We set an all-time high in this index. Did we close below the open? Here's where we opened, here's where we closed. Absolutely. We call that a red candle high. That's a single candle reversal. That's an ugly candle. It came with it with a kahuna to the downside. And if we have another candle that looks like that tomorrow, then I'm going to be thinking that we have broken the top and that the next move is lower. I have been somewhat of a bull and still am long because that's for my timing model. But we put the leaders index together to give us a early warning signal when the market's at risk. We'll see what we get in the markets on Wednesday, but that is a very worrisome finding. And again, as I said in the title, I've got other things that I'm concerned about that I'm going to show you. Market MRI Pro is my software tool. I've got indicators in TradingView, TradeStation, and I've got a marketplace application, a paid app, in addition to some free tools in Wealth Charts, soon to be in Metastock as well with a add-on. Market MRI Pro is a freestanding, including data product. It was created by one of my followers to make my workflow easy. We decided to take it to the market, and it's been selling very well. I had a 4th of July special. It was $300 off that ends midnight on July 11th, going into the 12th. $100 if you join Top Down Trader, that gives you $400. And if you've purchased my tools in the past, you get $200 if you have the Wealth Charts marketplace purchase or our app for TradeStation, which is not TradeStation, it's a specific product that we sold. I am also holding a Market MRI Pro trading session Saturday 11 to 1. It will be in my nightly email each night from Top Down Trader to my members, and I will not be posting it anywhere else. It's for owners or trial users of Market MRI Pro, owners of my tools on any other platform, and then the info will be shared in the Top Down Trader group emails. You do not have to be an owner to attend. Speaking of owners, there's a number of people who I sent out some invoices to a couple days ago. Several of you have already paid. Some of you started in the June meeting. I am going to turn off the trial users if they haven't purchased, probably after my live session on Saturday. So if you're going to purchase, you've got the invoice. If there's questions about it, please reach out to me. And if you're in that group and you didn't get an invoice, that means I typed your email in wrong. Please reach out to me so you don't get it turned off by mistake. And what else? For more information, if you're a current customer and need support, coding at Market MRI Pro and my partner Praveen will take care of you. If you want to order it or any questions about anything I discussed today, just reach out to me at marketmripro@gmail.com and consider joining the Google group. Let's take a look at the charts. So before let's go in and look at the day we had. It wasn't a horrible day by any means. Although futures are down a little bit right now. We'll see what we get tomorrow. But if we look at one-day change, let me put my glasses on. You could see that in the upper left-hand corner, this was another small cap day. Russell was up 0.7, Bitcoin was up 0.68, dollar was up 0.07. The Qs and the spiders were both within 0.05. A flat line, Qs up, spiders down. Diamonds were down the most, 0.36, and the VIX volatility was down 2.68 if we look at the VXX. So all in, kind of a boring day in the U.S. markets as far as the major indexes went. But there were a lot of big moves, and we'll talk about some of them as we go further. If we look at the daily range, you could see that the dollar, which was up 0.07, finished at the bottom of its daily range. And everything else is and 14% near the bottom for the diamonds. And the leader, the Russell, was only in the midline, or the middle of its daily range. So nothing finished at the top of their daily range. And again, we were led by the Russell. Volume, kind of average looking volume. I'm looking at it in Market Surge. Volume continues to update in a lot of products overnight, so that could change. I was a bit surprised to see that despite the last couple of days, we've maintained our new high minus new lows positivity 78 at 12 months on the NYSE and 55 on the NASDAQ. Over here, if we look at one-day change, we can see where the leadership was. Energy, materials, and then tech, semiconductors remain very strong. And then after that was healthcare, which has not been a leader. In fact, over the last 50 days, healthcare is the only S&P 500 sectors down over 1.76 of 50 trading days, or about 2 months. You can see the laggards, interestingly, were utilities and staples, which are defensive plays, and then add in financials. If we look at themes on the session, you could see cannabis, but this one's all over the place. I don't pay much attention to it, to be honest. It's been down minus 7.77 over the last 50 days. But lithium, which was at the bottom yesterday, at the top, oil production, genomics, autonomous vehicles, Chinese web, Internet of Things, biotech, semis, China, Norway. And if we pull down to the bottom, Norway I think of as a commodities-driven economy. And if we look down here, what do we see? The big losers on the session: silver, gold, uranium, solar. Yeah, I mean, I don't know why it was a surprise. Trump's been talking about ending subsidies on solar for quite some time, and with the fighting with Elon, it wasn't going to not happen. But several of them, including First Solar, sold off quite a bit. Even MLPs were down on the market but just a little bit, 0.15. Now, what's interesting is when you look over here, you can see at 64% of the S&P 1500 were up, 63% or 62% of the NASDAQ, and 60% of the NYSE. So even though the indices were kind of soft outside the Russell, the average stock was up. And when you look at today versus yesterday across all three, the number of sectors and industry groups up were increased as well. There's nothing there that's ugly and that should scare you. So why am I a little bit less bullish than I normally am? Chart number one. Yes, I do have other programs, and this one is kind of hilarious in that if you look at the date, the last date on their copyright is 2010. This is a 20-year-old program called Stock Finder. I think it was originally called Blocks, brought out by Warden, and it was the easiest program for an individual to create their own scans, and just by dragging and dropping, and then the code would write by itself. Those who had it, many of them keep it and just have to subscribe to Warden to use it, although it's no longer supported, and it's a bit in the pain in the butt to install. This is why I keep it. I look at the S&P 1500 and I want to know how many stocks on a daily basis, which is usually less than 10, have a MACD divergence, whether I look at the line or the histogram. Here's what we're looking for. Here's Amazon setting new highs, and look at the histogram. The line's not, and neither is the histogram. And when you look at historically, when you see this, the red bars coming in, it's often a period of time when an index is toppy and gets ready to roll over. And we're at that point on an index or a stock by that matter. And I think we're getting to that area on Amazon, but not just Amazon. Look at the stocks that are here. Amazon, Zscaler, Huntington Ingalls, doing very well. Defensive stock, already breaking down perhaps. New York Times, Bank of America, boy, hard break today on this one, and JP Morgan. McKesson, I stand by the thing that always goes up, especially in bad markets. Maybe I should be worried here. Look at the MACD divergence there. And this list goes on and on and on, and it has a lot of big stocks in it. So you could stop it here if you want and look through. And then if you want to know about individual stocks, I'm not going to run the scan. It takes a few minutes, but you see all those red lines as I go through the rest of the S&P 1500. Those would be stocks that have either the, in this case, that would be the histogram, I believe, divergence, but don't have divergence on the lines. I think that's a worrisome thing. And then I've accumulated some crazy things over the years, and one of them I got was from this company called Alchemy, and I can basically put a list in, and all the quirks of TradeStation. We'll remember what they are, but I've got somewhere about 600 stocks in this list. And these were not bad stocks. These were good stocks on the weekend. And if I look at how many of them are going to show me a bullish stochastic divergence, none. How about bearish? About 50 of them. How about a bullish RS divergence? One. How about a bearish, not RS, CCI rather? Quite a few. How about a MACD? Bullish? Oops. Nope. How about bearish MACD? And these were good stocks, sort of my top 600 list from the weekend. How about RSI? Bullish? One. Hinge. So I think it's an IPO. Pulling back. And how about bearish on the RSI? That's quite a few. That says 82 and it starts at 35, so that's 47. This is a different program that looks for bullish divergences, doesn't see any, no surprise. And then we can look up here, and we've got a bearish stochastic divergence on the Russell. And then we got gold's got a MACD divergence, industrials, tech, regional banks, stochastic divergence. So I don't necessarily go and trade an individual stock because of divergence. I might go and look at it. But when I see what Ian would call perhaps a sea of red and very little blue on the divergences, positive and negative, I'm a little bit nervous. So I factor in this. I factor in that stock finder with over 100 of the S&P 1500 having a MACD divergence with both line and histogram, and what happened in the leaders. And I think it might be okay to raise a little cash. Now, I just put a lot of cash into my trading account. Um, so it's percentage wise, it's probably at 60%, 70% right now. But I may take a little bit more, and I actually took some of my hood and sezzle off today already. So doesn't mean we're done going up, but this is a game of risk management, and I think the risk is a little higher than it was even a couple days ago. My timing model probably won't change on this. And if you look at the daily, you don't see any changes in the daily signal. You don't see changes in the bongos, and you're still well above the WMA. So I don't expect it to flip anytime soon. This is still directionally higher. Both the daily and the weekly signals are long, but with those divergences, I can back off the gas a bit, and that's what I did. If I look at the U.S. index ETFs tonight, let this load. Again, we are in a period of strong seasonality, and I talked about the other day that maybe we pull back a little bit before we go higher, and we did. So is this a horrible day? No, it's down 0.06. Is this a horrible week if we look at the weekly on the spiders? No, right now it's an inside bar in an uptrending market. But I'm just putting the weight of the evidence, and I think it would not be a shocker to me to see the markets do a bit of a pullback. Now, do we pull into the 17 as we've done multiple times and rebound? Sure, that's probably pretty likely. Even a pullback to the 50 isn't the end of the day. So it will hurt short term, hence why I rose some cash. So the spider down a bit still looks pretty good. I think the Qs are going to look very similar, except perhaps not as bad. The Qs were actually up a little bit, but really didn't do much in the session. And when you put a weekly on these guys, does this look horrible? No. Still in an uptrend. You're going to get inside bars here. To me, that's a day that is usually a continuation, and the seasonality is still fine. If we look at the Dow, that one looks a little uglier, but let's see if anything's really changed. So the Dow was the big loser, down 1.27, but still an inside bar. Seasonality is a little flatter than the others. Maybe that's a problem. That's on the weekly, it's an inside bar. And on the daily, you could see we've pulled back, and you've had a doji here, what looked like a breakout. Perhaps that's going to be false. We got within 1% or so of the all-time highs. Seasonality is fine. But would a pullback to the 17 mean that this is over? No. But I do think we could see some weakness here. If I look at the Russell, Russell is holding. Actually was higher in the session, up 0.7%. It was up higher during the day, good seasonality. And if I look at a weekly on the Russell, you got one good day, one bad day, and right now you got an inside bar. Long-legged doji that was also an inside bar. So again, do I expect the market to pull back here? I do. Do I expect at the end of this bull? No, I think it's going to be a modest correction, and then I think we go higher. But raising cash in case it's worse is never a wrong thing to do. If I look at the VIX was actually up on the futures 2.3%. Well, that's the weekly. Let's get off the weekly. Let's get back on the daily here. In the daily, you can see it dropped 5.51% after a big gap up and a bit of a shooting star the day before. And the dollar is working its way higher, but after trading higher, it finished relatively flat and was up 0.07. If we look at commodities, A little more risk is coming in. Interestingly, gold was down in the market on Tuesday over 1%. Silver was up point, actually it was down 0.42. It's an open red, so it closed at the high, even though it was down from the prior day. Little bit of a bottoming tail here. Silver is holding up pretty well here. Is it the industrial applications? If we look at oil, it's trying real hard to get back towards prior highs. A lot of conflicting stories there. Trump was talking about $1.99 gas. I remember when gas was $1.99, but it was a long time ago. And we could see natural gas bouncing down here. And then what worries me the most perhaps is the 10-year and the 30-year both were up 0.62 and 0.35 respectively. The 30-year getting darn close to that 5% area, which I think is a dangerous spot for the market. If you want to be bullish, they had topping signals. So they opened, traded higher, and closed lower. So theoretically, maybe that's a short-term top. We shall see. If we look at the buckets, over the weekend I talked about a right shift. On Monday I showed you concern, or we showed you the concern. The buckets have come down off of the big highs and are still bullish looking, but certainly nothing that says there's a signal to go down. If I look at market breadth, you can see a doji with a big topping tail on the NYSE. Not much happened on the NASDAQ, this is the composites. As I mentioned before, volume, which isn't out yet in our data on these, at least on the NYSE, looks to be, as I mentioned, kind of average volume. If we look at stocks above the 50 in white, 20 in green, 200 in red, they're at an extended area and they were up a little bit today. Probably no signal there. Similar on the NASDAQ. And if you look at new high, new lows are positive and have been, look at the green that's come into this over the last period of time. We've been seeing a lot of new highs and new lows, especially in the NYSE. The advanced decline was positive, although modestly so, and up down volume. And then as far as signals tied to these last bars, I did not see one. Make sure one hasn't come up since I looked. Oh, I guess we had another bango today, which means a volatile day with people buying everything they could on some of that large cap NASDAQs probably. And then if I look at another breadth tool that I built, I guess we could release this maybe if people wanted it. But I just tried to build some of the more traditional, when I looked at the 13-week new high, new low coming down, which is no surprise after it hit sort of a key reversal area. Here are the different moving averages, stocks above the 20, 50, and 200. Here is the advanced decline line, and here is the RSI. And up top is the spider, the NASDAQ composite, the S&P 1500, and the Russell 2000. Nothing really here today to talk about, but I'm going to look at that 13-week on the individual indices on a regular basis and looking for extremes, suggesting a reversal. On the ratio charts, what we can see is that industrials are holding on okay. Tech still looks really good. We talked about that last night. Communications turned up, and materials and energy turning up. And even real estate's weak, utilities weak, staples weak. So even the defensive things in healthcare are not showing anything happening to the upside. Seasonality, I didn't run it before I started, but basically we have built seasonality in. You could look at any list you want. Let's just look at a smaller list. Let's look at the NASDAQ 100. I think that'll work. And then let's look for at least 10%, an 80% hit rate. And let's look at tomorrow's date. So from tomorrow, look at the NASDAQ 100. I don't know for sure it took it or not. If it takes a while, it's probably the bigger list. But we can scan here and see if there's anything that meets our criteria for strong seasonality. So what we got here are 53 different instruments. using the start date of July 9th, looking at least 80% hit rate, meaning in the direction that we predict, 80% accurate, at least a 10% return. And let's look at over the next 30 days the strongest edges. Carvana, this is one that really strong seasonality. So we've got a scanner in here, but what I really like about the seasonality is plotting it on every stock. And here's one that I think is probably in a short squeeze, Newegg. Um, Fundamentally, I looked at it and it really doesn't give me any belief that this is great, where its revenue has dropped over the years from 62 million in a quarter, or this, I guess that might be annual. Looks like annual up until 23, but 36 in August of 23, and then they're giving us 30 in August of 24. Maybe they're different time frames, but I don't see anything exciting here, to be honest. And this thing is having a really nice run up. Here's the seasonality, and you can see up here, this is 10-year, that's 5-year. Um, I'm not really advocating on this. This looks like a junky stock with a short squeeze, but I do like the fact that I can plot seasonality. As a top-down trader, I'm always going to go in first and look and see what was working. And let's rank by percent change, both on the sectors and the industry groups. And then what I like to do is let's take the top couple and let's energy, healthcare, and financial services. And then here we've got listed them, and this is probably, yeah, this is has to be put in the right sectors, but let's look at 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So these are the 10 industries in the top 3 sectors. All right, I got 228 stocks. Let's trim them down by putting price at least 5, volume of 500,000 shares. That gives me this list here. Let's rank them by percent change. Let's just go quickly. When I see that pattern, unless I know a news story, I don't even bother looking. All right, I'm a physician. I don't even know what that means, but that wasn't on today's date. Sometimes there's splits that that don't get put in for another day or so. PGNY, Progeny Healthcare, big move. Was this earnings related? Business update. Market certainly like that. Earnings are August 5th. Pretty strong earnings growth with surprises on earnings and revenue. PE is 14, doesn't pay a dividend. Let's look at it on a weekly chart. So you have a stock that's fallen pretty hard. We'll see. I mean, it's just, again, I'd rather buy things that are high to go higher, not something that gave one nice candle. Could be going higher, probably is going higher, but not my cup of tea. VTLE, Vital Energy, SM. Again, when you're doing top down and the market's rotating, what's coming to the top? The things that were laggards, and you're seeing that here. So you're seeing a lot of energy companies coming to the top of the list. Murphy Oil, I owned that thing when it was a cheap stock. It's still, must have split because it's still pretty cheap. Expro Group Holdings, that's oil services. More oil services. Weatherford's actually moving up, a $55 stock. Seasonality is nothing too exciting. And I always like to come up here. Do they pay a dividend and how much? A teeny weeny dividend. PE's 14. You look at these stocks and the revenue's not, their earnings are not trending higher and the revenue's kind of flat. Again, not that exciting to me. So I might change my tactic here. And now let's go put pullbacks in an uptrend, so at least require an uptrend, which some of these will make. Let's rank by the number of dots. And let's go through these. Here's Progeny. It's in an uptrend, I guess. Short-term Matador is an energy. All right, this is more interesting to me. It's already in an uptrend. Oil is starting to go higher. Great volume. It's in an EMS, had a CPR volume breakout in momentum. Relative strength and OBV both crossed over today. High-low jumps at 50. Not extended. Let's look at fundamentals. Next earnings are in 2 weeks, so I have to be aware of that. It's been having surprises, which is this column on both revenue and earnings. All right, if I had to pick one so far, Matador looks okay. Helix is a services. I got to go back to daily, which I'm at. Devon Energy, I thought they got bought. Tempting to break the 200. A break of the 200 might be interesting. X-Pro is an oil services. Again, these are beaten down stocks that are trying to make a run. This was Warren Buffett's stock where he's bought a bunch at 60. It's a bargain now if you believe it's going to go up. So I'm not getting that excited as I look through these. Does that mean they're not going higher? They're probably going higher. I think that you could probably argue that energy is oversold, and you know energy led today. Maybe you start to see a comeback, but it's hard to find stocks that look like leaders in energy. I could just rank them by industry groups and look at the top industry groups, or I could do bottoms up. So let's go back to my list of stocks. Now my list is usually about 3,700. What do we got today? Let's take off all the filters. 3704, and it represents, quote, liquid stocks defined as over $1 and 100,000 shares in the NASDAQ, NYSE, and the Amex. It will change day to day based upon what the stocks do. So today I want to start a little differently. Let's take a look at the FANG stocks. Amazon, I showed you, has some negative divergence coming in. You could see relative strength is breaking down. OBV is not great. Seasonality is kind of neutral. That's not a good thing when Amazon's doing this. Now, is it because somebody came out and said Prime wasn't doing well? App has been a leader. It's pulled back. I'd love to buy this again. I thought it was going to set up. It failed here at the 50. Does it come back down to 200? And seasonality is not showing me much. Google. Nice uptrend, pulling back here to 200. I'd have to see some positive momentum. Relative strength and OBV are negative. Seasonality, it's nice, but right now I don't see a technical reason to buy it. Meta, which has been incredibly good. Take a look at Meta. And Meta continues a nice uptrend, pull back to the 17. Again, not a great seasonal time here. Holding okay. Microsofty looks beautiful, doesn't it? Tight, nice run up. Seasonality is kind of neither here nor there. I need to see a reason to buy it. I don't see a reason here. Is this going to be a little flag that goes higher? I don't know. Netflix, which has been the humdinger, but one that's showing signs, that was a positive sign, by the way, of divergences and maybe topping here, has come off its highs, but it really hasn't broken down. NVIDIA, I think it's either at all-time highs or very close to all-time highs. Let's put on a monthly. Yeah, NVIDIA is at all-time highs. That's pretty exciting. I've got some 180 calls out there that have become worth some money. The question is, do I leave them or do I sell them? I'll probably leave them because we're about to get into some tough times in the market. But NVIDIA looks the best of all the stocks we've looked at today, and seasonality doesn't look too bad at all. And then Tesla seems to ebb and flow with the news flow of Musk versus Trump. Never good to have your CEO fighting with the president, especially when the one we have right now. So you look at the big cap tech, and you don't see a lot of things that look really good, and that's somewhat bothersome. I put a list of high relative strength stocks in over the weekend. So let's just look at some of these dots and see if anything looks interesting. Sora, it had 4 dots. I'm not even sure why it was in a high relative strength list unless it's being looked at. Recently, Futu, that's a beautiful chart. Follow the V bottom, recent highs. Let's see, go out to monthly. I don't think this is all-time highs. No, it's still way off the all-time highs. But it's really had an extremely nice move here. Seasonality is not great, but again, another positive looking stock. except if you don't like triple tops, and that's kind of where it's at. So it's an area where I think could be troublesome when I see relative strength breaking up, OBV breaking up, and 4 dots, gap volume, breakout momentum. That's attractive, but when I put in the triple top and seasonality, it makes me a little nervous. So I could look down this list, but let's just go back to look at the bigger list. And now I'm not limiting it to things that are rotating that were the leaders over the last couple of days. It's got all of them. Let's go to pullback and uptrend, $5, 500,000. And I've got to really see perfection to want to enter a lot of longs right now, as I'm a little concerned we're going to have a pullback. So let's just go down this list very quickly. Warby Parker. I don't like their glasses. I don't think my family likes their glasses. Um, Big pullback, basing here, good volume session. When's earnings? Earnings are August 14th. I love the positive earnings per share growth. Um, I love the revenue changes. Um, Nice base setting up here, good volume, a CPR, volume breakout momentum, relative strength, OBV. Doesn't look bad. Let's see what else. RDUS, right? Looks like a buyout. Quidel Laboratory, well below the 200. Impinji, Progeny, we looked at already. On semiconductor, this one looks really good too. Here is a semiconductor just breaking out above its 200. Look at the blue dots, the relative strength and OBV. Now, the one concern is that the high jumps at 93, but I have my own amendment to the high jump is when you're sitting close to the 200, I don't care. So on may be as good as anything we've seen. So I'm going to put on into my list. I know mRNA stocks, Moderna did well today. Here's Novavax. Matador we talked about already as perhaps of the energy stocks, the one that I like the most. LEG is Leg and Platt. Huntsman. Helix is a energy services company. Goodyear Tire and Rubber Company. Here's Futu again. So I'll typically go down the list. And then the other thing that I like to do is special scans. And my favorite special scan, we'll finish on that, is 5 and 500. And then let's look at 2 days momentum up. Hit OK. And all I got are two things, and they're both pretty cheap. BTCS. Wow. Okay, but what happened here? And could you actually buy that here? Intent to raise, they're going to become an Ethereum holding company. All right, well, I guess I understand why it went up. That gets people excited. If you want to read about it, you just have to click on this link and it'll bring up the story. And whoops. Blockchain technology consensus solutions. Raise 100 million to acquire Ethereum. Does everybody want to become MicroStrategy? And YMM, this is a Asian stock, I believe. Truck Alliance, breaking out here. Seasonality is kind of neutral. Relative strength OBV looks good. Makes money. If you believe this, it looks like a huge movement in revenue. That's hard to believe. Dividend, 10 cents on a $12 stock. Not a very big dividend. Again, I don't think this is that exciting as well. So I gave you a couple, maybe on semiconductor. Matador looked the best. But you know what? It's okay to not buy anything because there is danger in this market. I'm not going short. I'm going to raise some cash. I'm not going to be chasing things. And just for grins, let's look at a couple of things here. Let's look at SQQQ and going to the wrong computer, SQQQ. Short the Qs. These are the ETFs. And look, they're not giving you any signal to buy. Let's look at TZA. Short the Russell. Let's look at Dog. Short the Dow. Let's look at SPXS. Short the S&P. Look, I can't buy these right now. So I've gone through top-down trading, showed you how I look at the markets. If you'd like to join, you're welcome to come see me on Saturday. Just join Top Down Trader, and you'll see each night an email will come out with the information. And thanks for joining. Hope you're enjoying these videos. More comments are great. I think people like my options assessment. Maybe I should do more of that. I'll do at least one every weekend of how I pick which trade when there's a trade to look at. And we'll see you tomorrow. Thanks, everybody. Be careful.